Are you a buyer looking at jumbo home loan options in 2023 and want to structure the best jumbo loan for you? Stay tuned for this video. If you're a seller who needs to sell a high price home where your buyers are looking at jumbo loans, you might want to listen to this as well. This is the best thing to hit jumbo since shrimp. All right, Matt, the mortgage guy, residential mortgage broker, powered by you mortgage, licensed nationwide. If you want to connect with me and my team, go to greatmortgagebroker.com, fill out the form, let us know where you're at and how we can help. In this video, I'm excited to announce a brand new program that I think is going to help a lot of jumbo buyers. And when this program rolled out, I also thought about some of my agent friends who have listings that are sitting that aren't selling, how this might be a way to structure seller credits to really help home buyers get into this home. So without further ado, 2-1 buy downs on jumbo loans now available. 1-0 buy downs on jumbo loans now available. If you haven't watched my videos on buy downs, I got separate videos on how those are structured on conventional deals. It's very similar, but now we've got it available in jumbo. And not only that, this lender that I'm brokering these buy down jumbo loans to allows us to underwrite the loans based on desktop underwriter. It's just a fancy way of saying we're going to underwrite them the same we underwrite a $300,000 conventional loan. There's not 1,000 hoops to jump through. There's not 1,000,000 months of reserves being needed. It's not as difficult to qualify for this program, this jumbo loan, knowing that we're just going to use the same rules and the same guidelines we do for conventional loans. So a couple things to get out of the way, and then I'm going to show you a real life example so you can see exactly what it looks like with this buy down program on a jumbo purchase. Okay, so eligible borrowers got to be your primary residence, can't be more than 4 borrowers per loan, have to have a valid social to qualify for this program. Only allowed to do up to 10 loans in your name. That's just a standard, Fannie Freddie conventional thing that applies here as well. And then for us, when we're underwriting it and seeing who qualifies, we've got to make sure it qualifies through DU. It can have an approved ineligible. And this is probably more in the weeds than you care to hear, but there's some exceptions for that. So anyway, we won't even get into all that stuff. Let's just look at an example, right? I think people really enjoy looking at examples. This should help clarify it for folks. As I pull up this example, I've got a specific listing in mind. I've got a buddy of mine who I'm thinking about who's got something that was listed at 1.8 million. They lowered it to 1.6 million. And they just can't sell it, right? So who knows what the sweet spot is, a price that the seller can live with, and a price where a buyer is able to feel comfortable with the payment. But let me introduce to you what it would look like if the seller was willing to give a credit of $27,000, which would be needed in my example here to do this buy down. On a $1.5 million purchase, that's less than 2%. And when they're lowering their prices by $100,000, asking for 27 isn't a lot, I promise you, right? So a lot of markets, California for sure, this is something that's feasible and something that sellers are going to be okay with doing. And if it helps a buyer get into a mortgage that's more comfortable for them, a mortgage that works better for them, I suggest we bring buyers and sellers together. Okay, so 6.375, when you look at this column here to the right, is the rate and the payment for years 3 through 30. What this $27,141 subsidy does is allows the buyer to have a 4.375 interest rate and reduced payment in year 1, 5.375 in year 2, and then we go to year 3 through 30, where it goes to 6.375 as long as you hold the loan. The reason why this is better than An ARM, adjustable rate mortgage is like, this thing can't go to 8.375. It can't go to 9.375. 6.375 is where it's going to be stuck for years 3 through 30. This $27,000 subsidy, if rates go down and someone's able to get into a jumbo for 4.5% a year from now, and so quite the possibility, you refinance, you get this seller subsidy back, whatever's remaining of it, right? If it's been 9 months, you've spent some of it. It's been 12 months, you spent some of it. But there might be $10, $12, $14,000 left of that seller subsidy. It's going to go as a principal pay down directly back to you as the buyer to pay down the principal balance. So in this example, if you just went out there and said, I'm going to put 20% down and have a 6.375 interest rate, you've got taxes, you've got insurance, you've got a total payment of $92.86. With this seller subsidy, you're able to have a payment that's $77.91 a month for the first year, $85.20 a month for year 2, $92.86 in years 3 through 30. A refinance can be part of the plan. It's not guaranteed. I'll be the first one to say that. But with most people forecasting interest rates going down, I think you can safely assume I'll probably be able to get into a sub 5%, a sub $8,400, $8,300 a month mortgage payment within the next, call it 6, 12, 24 months, right? And so you write it this way, you get this reduction in payment from the seller. I know tons of clients I talk to day in, day out. Tech buyers, right? They're working at these tech companies. They're making $300,000 a year. And, it could be a matter of, they see the career trajectory. They see that and they want to ease into the payment. It might just be because you want that lower payment. You want that extra cash flow in years 1 or 2, even if you don't necessarily need it, right? And that's the thing. You're going to qualify based on $92.86 a month. You're going to have to qualify for that. This isn't something where lenders are trying to put you in a position where you can't afford it, but you're going to see a lot of savings in year 1 and 2. Good thing about it, like I said, is you're going to get a refund of any seller subsidy you don't use. And I know for fact, right? If this listing that's sat for a while, you could go to the seller and say, listen, we're willing to pay you $1.5 million. We need $40,000 in seller credit, 1.46 net to you. See if that works for your sellers when your buy agent submits it. It's a good deal for both sides, right? This $40,000 from the seller not only pays for this 2-1 buy down, it pays the point-ish it costs to get the years 3 through 30 rate down to 6.375. None of this is an offer to lend. These are just examples to look at. So don't sue me, bro. NMLS number 1088993. I just have to throw that out there. Educational purposes only, right? But this is something that I think is going to be super beneficial to folks. So if you've got any questions on this, whether it's jumbo, whether it's conventional, whether it's VA, FHA, we're more than happy to help. We've got all the loan programs. We've got all the best investors in the country, and we're across the country. GreatMortgageBroker.com. Feel free to reach out. If you're in a market, I don't have a personal recommendation for you, which I do in a lot of markets in California. Go to homeandmoney.com/Matt. Fill out that quick form. You're going to have a responsive agent who they're going to hold accountable for providing you with great service. homeandmoney.com/Matt. And again, to connect with my team to get pre-approved for us to put down a specific scenario for you to see what it looks like for your scenario, greatmortgagebroker.com. Thanks for watching. I appreciate you. And more videos on this channel. If you want mortgage education, promise you there's some good ones. Type in what you're looking for and Matt the Mortgage Guy, you'll probably find it.